I believe in the emerging market story. I believe in the BRICS story. I believe that China has been very successful for the last decade or decades. But my worry is that there has been too much hype about the BRICS country, about Brazil, Russia, India, and China. All of these countries could grow very fast, but all of them are not accelerating the kind of structural, market-oriented reform that are going to increase potential growth. So China was growing 10%, last year was 9%, this year is going to be 7.5%. If they don't do certain reform, going to switch demand to consumption, China down the line, as I discussed, could have a hard landing. Potential growth in Russia is barely 3.5%, as is an economy based on oil, energy, and little else. Even a country like Brazil is moving away from doing market-oriented reform. There are variants of state capitalism, like in China and Russia, that are starting to be implemented even in Brazil. Potential growth rate of Brazil might not be more than 4%. And for a country with this much poverty, 4% is not good enough. South Africa, potential growth of 3.5%. In India, growth was for 2 years 9%, now it's slowing down to 6% as the coalition politics of India is stalling any structural reforms. Now, the kind of structural reforms that are needed in these emerging markets are different, in each country different. China has too much infrastructure spending, not much private consumption. India and Brazil have plenty of consumption, but not enough investment in infrastructure spending. But the kind of reforms are different, but all of these countries have to accelerate market-oriented reform, and unfortunately, a number of them are drifting away from this market-oriented reform. If anything, they're moving towards variants of state capitalism, of state interference in the private sector, using national champions, having government intervention in the economy that becomes excessive, and things that are not going to be conducive of higher potential growth over the long run. And in the case of China specifically, the biggest China challenge is the following one. The traditional model of growth of China has been export-led growth with a weak currency. In recent years, massive amount of fixed investment, real estate, infrastructure, industrial manufacturing capacity, high saving rates, and low consumption. Today, in China, fixed investment is 50% of GDP, between infrastructure, real estate, industrial manufacturing capacity. No country in the world can be so productive. You take every year half of your GDP, you're investing into new capital stock, and you're not going to have misallocation of resources, rising non-performing loans in your banking system, an investment bust, and a rise in bad debts of state and local governments, and so on. So the biggest challenge for China over the next few years is going to be to do the structural reform. They're going to reduce savings, they're going to reduce net exports, they're going to reduce fixed investment, and they're going to increase consumption as a share of GDP. I do worry that those reforms in China are going to occur too slowly compared to what's optimal and desirable, and therefore not this year, not next year, but if those reforms are not implemented in the next 2 or 3 years, you could have a significant slowdown of growth in China when the investment boom goes into bust, when consumption doesn't grow fast enough. You could even have a hard landing in China in the next few years. It's not a short-term risk, but something that you have to watch.